Greetings, children. Welcome to my channel Inside Accountancy by Shakun. Accounting Made Easy. I hope you all have subscribed to my channel. If not, please do so. And don't forget to leave a comment after watching the video to show that you really liked it and to motivate me, boost my morale. Thank you so much. And moving on, we are going to talk about chapter 3, that is Tools of Financial Statement Analysis, which is the third chapter of part B, T.S. Grewal. So let's start that. In this video, we will be talking about the tools of financial statement analysis, the common size statements. We already talked about the comparative statements in the previous video. For more details, you can click on the I button. In this video, we'll be specifically talking about the common size balance sheet and the preparation of common size statement of profit and loss. As we have already discussed in chapter 2, the various tools of financial statement analysis are comparative statements, common size statements, ratio analysis, and cash flow statements. Comparative statements, as the name itself is suggesting, means to compare the financial data of 2 or more years. It is a horizontal analysis. Common size statements, it is a vertical analysis where we compare the data of 2 or more years for maybe 2 or more firms. And ratio analysis is the mathematical expression between the financial elements of the balance sheet or the statement of P&L. And cash flow statement is the which tells us about the inflow or outflow of the cash and cash equivalents. I have talked about all this in detail in the previous video also and in chapter 2 also. So I will not talk much about this now. Moving on, in this video we are going to talk about the common size statements, as I told you. And whenever I use the word common size statements, the word statements would mean the preparation of balance sheet and the preparation of the statement of P&L. So like in case of comparative statements, we try to understand the preparation of comparative balance sheet and comparative statement of P&L. Similarly, here also we'll try and understand how a common size balance sheet is prepared and how a common size statement of P&L is prepared. So now let's first talk about the common size balance sheet. Okay. So now let's have a look at the format of common size balance sheet. Now in the format, as you can see that the various items that are mentioned in the particulars columns, that is actually same as the format of a balance sheet. As I told you that according to the Companies Act, the face of the balance sheet should always be same for every enterprise, for every company. The face of the balance sheet should be same. So the headings and subheadings would be same, right? Now, the previous year values and the current year values again would be given to you in the question. So basically our column 1, column 2 and column 3, the previous year values, current year values and the particulars where the format is given, that would be given to you in the question. So this and this will be given to you in the question. Now since we are talking about the common size balance sheet, so basically we are going to find out the relation between every element that is given here, the relationship of every element to, since we are talking about a balance sheet here, the relationship to the balance sheet total. Okay, so relationship of every item is found out with the balance sheet total for 1 year, and then the same thing is repeated for the second year. Right, for example, if I say the tangible assets are 5 lakh and the total of this year is 25 lakh. So when I calculate the percentage of balance sheet total for the previous year, so how will I calculate this percentage? This percentage will be equal to 5 lakh, that is the particular element that we are talking about, divided by the balance sheet total, which is 25 into 100. This will give me this percentage. Similarly, for the next year, let's say the amount was 8 lakh and the total was 30 lakh. So how can we calculate the percentage? 8 lakh, that is the element, divided by the base, which is the balance sheet total, into 100. This way we can do for each element that is mentioned here in the balance sheet. For each element this step will be repeated. The only difference is between the comparative and common size is in comparative we were comparing the previous year with the current year and we were calculating the absolute change and then the percentage change, right? That was a comparison made. Here in common size statement, each element that is given in the balance sheet, for each element the percentage is calculated from the balance sheet total, and for each element the percentages are calculated and shown. The same thing is done for previous year and the same thing for the current year. Now let's understand this with the help of an example. Okay, so following is the balance sheet of Y Limited as of 31st March 2018 and 19. Prepare a common size balance sheet. Now this is the question that is given to you. As you can see, the format is already given to us. This is given to us. Then we have the previous year balances and we also have the current year balances. Both these things are given to us in the question. So we are just going to copy this column and the previous year and the current year column. Then we'll calculate the percentage changes. So now let's have a look at the format, how we are required to do the solution. So this is the common size balance sheet. What I've done is particulars, since it was given to me, I've simply copied. Again, the previous year was given to me and the current year was given to me. So I have only copied all these amounts here in my format. Okay, now what is the next step? The next step is the absolute amounts are given to us in the question, right? We need to calculate the percentage of balance sheet total. Now let's identify the balance sheet total. We have 10 lakh and we have 13 lakh 20,000. 10 lakh for the year 2018 and 13 lakh 20 for the year 2019. So now we need to calculate the percentage of every element that is given in the balance sheet with respect to the balance sheet total. Now first item that is given is equity share capital, which is 4 lakh. So 4 lakh divided by 10 lakh into 100 gives us the percentage, that is 40. Then we do repeat the same thing for the next item, that is 1 lakh. So 1 lakh divided by the, this is the base that I'm taking, okay? So 1 lakh divided by 10 lakh into 100 gives us 10%. Then the next item 3 lakh, 3 lakh by 10 lakh into 100 gives us 30. Then the next item is 2 lakh, 2 lakh by 10 lakh into 100 gives us 20. Obviously when we take the base, whichever thing has been taken as the base, for them the percentage would always be 100. That's obvious. Then we repeat the same thing for the remaining items, the remaining elements that are given in the balance sheet, and we find out the percentages. So 5 lakh upon 10 lakh, 1 lakh by 10 lakh, 1 lakh 50 by 10 lakh and 2 lakh 50 by 10 lakh into 100 gives us these respective percentages, right? Now we repeat the same thing for the year 2019. The only difference would be that in 2019 the base would be different. The base would be 13 lakh 20,000. Okay, so again for the first element is 6 lakh. 6 lakh by 13 lakh 20,000 into 100 gives us 45.545. Then 1,50,000. The next item divided by 13 lakh 20,000 into 100 gives us 11.36. The same thing we are going to repeat for others. The base obviously which is taken would have 100%, and the same will be done on the asset side, and you will get the respective percentages. So this is how we calculate or we prepare a common size balance sheet, where the first three columns are basically given to you in the question. You only need to find out the percentage from the balance sheet total for the previous year and for the current year. Now let's talk about the common size statement of P&L. Again, the format would be same as we talked about the format of common size balance sheet. Similarly, in the format of common size statement of P&L also, we have the same columns. Only difference is the particulars column. In the particulars column, we have the format of income statement. Same, we have the absolute amounts which will be given to you in the question for the previous year, for the current year. Then we need to calculate the percentage again. So here the percentage is taken of revenue from operations. In the balance sheet, we had taken the balance sheet total, right? But here we take the revenue from operations as the base. So obviously whichever is taken as the base, I told you, would have 100%. So this revenue from operations would have 100%, and then respectively for every element we will calculate the percentage. For example, if the other income is given as, let's say, 20,000 and RFO is 2 lakh. Okay, so 20, how will we calculate the percentage here? 20,000 upon 2 lakh into 100 will give us this percentage. Similarly, we'll do for all these items respectively. Now let's understand this also with the help of an example. Prepare a common size statement of P&L from the following statement of P&L which is given to you. So this is the question. We already have the format. Now here the items are given in proper format. Unlike the previous question in the previous video where the format was not given. Now there are chances that in case of a common size statement of P&L, the format may not be given to you. You may have to put it into the proper format. So particulars is given to us and year 1 and year 2 is also given to us. Now let's look at the solution. So I've taken like random years here. I've taken 18 and 19 only. So we were given revenue from operations. We were given the amount also, that is 14 lakh and 16 lakh. Since this is the base, so obviously there will be 100 will be the percentage. Why? Because here the percentage has to be taken from the revenue from operations. The next item here is expenses. Now in case of expenses, we are given here purchase of stock in trade. Now for both respectively, the percentages have to be calculated. So base is 14 lakh and 16 lakh. So 9 lakh by 14 lakh into 100 gives us 64.28. Similarly, 10 lakh by 16 lakh into 100 gives us 62.5. Then the next item given here is changes in inventories of SIT, the stock in trade. Again, we'll do the same thing. The element divided by the base into 100, which gives us respectively the percentages. The next item given was, I'm just going to copy the question here. Finance cost percentage also we will calculate. The element divided by the base into 100. Same thing for the next year. Element divided by base into 100. Then we have other expenses. 90,000 divided by 14 lakh into 100 gives us 66.43, and 1,30,000 divided by 16 lakh gives us 8.12. So what are we doing? We are finding out the percentage for every element and we are taking the base of 14 lakh. And in the next year, we are again taking the percentage for every item and the base is taken as 14 lakh, the RFO for the respective year. Then we find out the totals and respectively the percentages for the totals as well. Finally, the profit before tax can be calculated. If in case the format is not given to you, we will put it into the format ourselves. So again, the same process is repeated here. The percentages are calculated by taking the base as revenue from operations. Income tax was given as 50%. It is to be calculated on profit before tax only. So 50% of 2,30,000 is 40,000. No, I think the tax rate was given to you in the question. I'm sorry. So again, we'll calculate the percentages. Then finally, we have profit after tax. Again, the percentages. So what did we do? We calculated the percentages. So what you can do is you can just copy this column first. Okay. Then you can write the values in the 2018 and 19 columns. And then you can pick up 1 year and start calculating the percentages, like every item divided by 14 lakh into 100. Then you can pick up the next year and do the same. So this way your uh, common size statement of P&L would be complete. So here we have talked about the tools of financial statement analysis and how to prepare a common size balance sheet and a common size statement of P&L. Thank you so much for listening to me so patiently. In case you have any questions, do not forget to leave a comment in the comment section below, or you can email me on my email ID. Don't forget to like, share and subscribe to my channel and do leave comments. So this is Inside Accountancy by Shakun signing off. Thank you so much.